In 2025, something happened in the American motorcycle market that nobody saw coming. While the entire industry was shrinking, while Honda was losing ground, and while Harley-Davidson was watching its sales fall off a cliff, one brand did the exact opposite. Kawasaki grew over 12% and surged to the top of the US motorcycle sales charts, fighting Honda for the #1 spot by fewer than 1,000 units. According to Power Sports Business, which tracks industry registration data, Kawasaki led the US market through September 2025, and the final year-end tally came down to a razor-thin margin with Honda. Meanwhile, Harley-Davidson dropped to third place in a market it once completely owned. And here is the part that really gets interesting. The total US motorcycle market actually shrank. Industry data shows 507,000 total units sold in 2025, down more than 5% from the year before. Honda declined 8 to 12%. Harley fell nearly 16% in North America. KTM collapsed by over 25%. The market was contracting and Kawasaki was growing fast. But the single most telling number is this one. The Kawasaki Z650, a middleweight naked bike that most non-riders have probably never heard of, became the best-selling individual motorcycle in the entire United States in 2024. Not a Harley cruiser, not a Honda, a Kawasaki. So how did a brand that most Americans still associate with lime green sport bikes end up dominating the biggest motorcycle market in the world? To understand that, we need to go back about 60 years to a converted meat warehouse in Chicago. In 1966, Kawasaki Aircraft Company, which was already building jet engines, ships, and industrial equipment in Kobe, Japan, decided it wanted to sell motorcycles in America. The problem was, they had basically zero presence in the US market. Honda had been here since 1959 with their famous "You Meet the Nicest People on a Honda" campaign. Yamaha and Suzuki were building dealer networks. Kawasaki was late to the party, so they sent a small team to Chicago. They rented a converted meat warehouse, hired 10 employees, and incorporated as American Kawasaki Motorcycle Corporation. That was the entire US operation. 10 people in a building that probably still smelled like beef. For the first couple of years, they sold modest two-stroke bikes that were fine but forgettable. Nothing that would make anyone choose Kawasaki over the competition. That changed dramatically in 1969 when Kawasaki released a motorcycle that would earn one of the greatest nicknames in automotive history. The H1 Mach 3 was a 498 cubic centimeters two-stroke triple that pumped out 60 horsepower, which was an absurd amount of power for a lightweight bike in 1969. It could run the quarter mile in 12.7 seconds. It cost $999. And it was so fast, so unpredictable, and so terrifyingly difficult to ride in a straight line that riders started calling it the Widowmaker. The Mach 3 did something crucial for Kawasaki's identity in America. It established that Kawasaki was the brand for people who wanted raw, unapologetic performance. Not the polite Honda, not the refined Yamaha. Kawasaki was the brand that built lime green machines that wanted to rip your arms off. The Green Meanie's reputation was born, and Kawasaki leaned into it completely. But the Mach 3 had a problem. Two-stroke engines were inherently limited. They were loud, dirty, and increasingly running into emissions trouble. Honda was about to release the CB750, a four-cylinder, four-stroke that would redefine what a motorcycle could be. Kawasaki needed to respond. What happened next became one of the great secret projects in motorcycle history. Kawasaki engineers had been working on a four-cylinder, four-stroke engine in complete secrecy. When Honda launched the CB750 in 1969, Kawasaki scrapped their existing design and went bigger, way bigger. The result was the 1972 Z1, internally codenamed New York Steak, because the engineers figured if the Honda CB750 was a nice meal, their bike would be the premium cut. The Z1 packed a 903 cubic centimeter dual overhead cam, inline four engine that made 82 horsepower and could hit 132 miles per hour. Those were absolutely staggering numbers for 1972. Honda's CB750 made about 67 horsepower from a single cam engine. The Z1 did not just beat it, it embarrassed it, and the market responded accordingly. The Z1 sold 80,000 units in its first 2 years of production and established Kawasaki as a legitimate superbike manufacturer. Riders who had been loyal Honda customers for years were suddenly showing up at Kawasaki dealerships. The Z1 was faster, it sounded meaner, and it looked like nothing else on the road, with that distinctive 4-pipe exhaust and the dark green and gold paint scheme. Then, in 1973, Kawasaki launched the marketing slogan that would outlast almost everything else in the industry. "Let the good times roll" is now over 50 years old and still running. Try naming another motorcycle slogan that has lasted half as long. Harley has changed theirs multiple times. Honda's "You Meet the Nicest People" campaign ended decades ago. Kawasaki found their voice in 1973 and never changed it. By 1974, Kawasaki had enough confidence in the American market to build a factory in Lincoln, Nebraska, making them the first Japanese motorcycle manufacturer to produce bikes on United States soil. That factory still operates today, assembling everything from jet skis to side-by-sides. So within 8 years of opening a meat warehouse in Chicago, Kawasaki had gone from zero to building a United States factory. But the move that would define the brand for the next 4 decades was still a decade away. In 1984, Kawasaki released the GP Z900R. And unlike a lot of motorcycle launches that matter mostly to enthusiasts, this one changed the entire industry. The GP Z900R was the first production motorcycle to break 150 miles per hour. Its liquid-cooled inline-4 was compact, punchy, and more refined than anything Kawasaki had built before. But the bike's real legacy was created 2 years later, when Tom Cruise rode a GP Z900R through the streets of Oceanside, California, in the opening scene of Top Gun. That single movie sequence turned the word ninja from a marketing name into a cultural phenomenon. Suddenly, every kid in America who saw Top Gun wanted a Kawasaki Ninja. It became one of those rare brand-product associations that transcends the product category entirely. People who knew nothing about motorcycles knew the word ninja, and they knew it meant Kawasaki. Kawasaki was smart enough to capitalize on this. Through the late 80s and into the 90s, the Ninja lineup expanded aggressively. The ZX-10, the ZX-11, then the ZX-12R, each one pushing top speed higher and higher. The 90s and the early 2000s became a genuine speed war between Japanese manufacturers, with Kawasaki, Honda, Suzuki, and Yamaha trading blows, trying to build the fastest production motorcycle on Earth. Kawasaki's ZX-12R arrived in 2000 as a direct challenge to Suzuki's Hayabusa, which had shattered the 190 miles per hour barrier. The manufacturers eventually agreed to a gentleman's agreement to electronically limit top speeds to 186 miles per hour, but the damage was done. Kawasaki had cemented its reputation as the brand that chased absolute speed. By 2006, when Kawasaki released the ZX-14 with nearly 200 horsepower, the Ninja brand had become arguably the most recognized sport bike nameplate in the world. From track days to video games to action movies, the green machines were everywhere. But here is the thing about this era that rarely gets talked about. While the sport bike headlines focused on the flagship Ninjas, Kawasaki was quietly building something just as important underneath. The Ninja 250, later the Ninja 300, and then the Ninja 400 became the default entry-level sport bike in America. Hundreds of thousands of riders learned to ride on small Ninjas. And once you learn on a Kawasaki, there is a very good chance your next bike is also a Kawasaki. That pipeline from entry-level Ninja to bigger Kawasaki models is one of the most underrated competitive advantages in the entire motorcycle industry, and it is paying off massively right now. There is another bike that perfectly captures this loyalty phenomenon. The KLR 650, Kawasaki's dual sport adventure bike, has sold 186,000 units since 1987. The US Marines even commissioned a diesel conversion of the KLR for military use. When Kawasaki briefly discontinued the KLR in 2018, the backlash from riders was so intense that Kawasaki brought it back in 2022 with a full redesign. That is the kind of brand devotion that money cannot buy and competitors cannot fake. To understand why Kawasaki is winning today, you need to understand why its two biggest competitors are losing. Let us start with Harley-Davidson because honestly, their situation is hard to overstate. Harley's revenue has dropped from $5.84 billion in 2023 to about $4.66 billion in the most recent trailing 12 months, according to their SEC filings. Global shipments fell from 179,000 units to roughly 132,500. Their North American retail sales were down 20% through the third quarter of 2025, based on Harley's own quarterly earnings reports. The stock price tells the story even more bluntly. Harley shares are trading around $20, which is down 63% from the 2014 high of about $55. This is a company that has been in structural decline for over a decade, but the number that should genuinely terrify Harley's board is this one. Their average buyer is now 57 years old. Only about 8% of their sales go to riders under 30. Compare that to Honda, where 42% of buyers are under 30. Harley's core customer base is literally aging out of the market, and they have not figured out how to attract younger riders. It is not for lack of trying. Harley launched Livewire as their electric motorcycle brand, and it has been nothing short of a disaster. Livewire sold 612 units in all of 2024 and 653 in 2025, according to Harley's financial disclosures. That is against an original projection of 100,000 units per year. The Livewire division posted a $73.8 million operating loss. For context, Kawasaki's Ninja E1 electric motorcycle starts at $7,999. The Livewire S2 Del Mar starts at over $15,000. The leadership instability has been remarkable. Harley has burned through 3 CEOs in 5 years. Matt Levatich was fired in 2020. Jochen Zeitz retired in October 2025. The current CEO is a man named Morgan Stars, who is Harley's third leader in half a decade. That kind of turnover at the top makes long-term strategic execution almost impossible. Now, Harley still dominates one segment. They own about 75% of the 601cc and above touring market, according to industry registration data. Those big road kings and street glides are not going anywhere soon. But that touring fortress is defended by riders whose average age is approaching 60. When those riders stop buying, Harley does not have a second act. Honda is a very different story. They are not collapsing, but they are losing ground to Kawasaki for reasons that are more subtle and arguably harder to fix. Honda was the comfortable #1 in US motorcycle sales for years. In 2024, they held about 20% market share, according to Statista. But in 2025, Honda's sales declined somewhere between 8 and 12%, while the overall market dropped about 5%. Kawasaki closed the gap to fewer than 1,000 units. So what is going wrong? A few things. First, pricing. Kawasaki has been ruthlessly aggressive on price. The Kawasaki Ninja 500 starts at $5,299. Honda's comparable CBR 500R starts at $7,399. That is a $2,100 gap for bikes that compete in the same segment. The Kawasaki Z650 is about $7,099. Honda's CB650R is around $9,299. In an economy where interest rates on power sports loans are running 8 to 12%, that price gap matters enormously. Second, Honda has a perception problem with younger riders. Honda makes spectacularly reliable motorcycles, and the CRF and CBR lines are genuinely excellent. But there is a reliable but boring stigma that Honda has struggled to shake, especially compared to Kawasaki's edgier performance-forward image. And third, Honda's electric strategy in motorcycles has been mostly theoretical so far. They have pledged $3.4 billion toward electric vehicle development through 2030 and promised 30 new electric models. But as of early 2026, Honda has not sold a single electric motorcycle in the United States. Their planned WN7 electric has been delayed to at least summer of 2026, according to RevZilla. Meanwhile, Kawasaki already has the Ninja E1 and ZE1 in dealer showrooms right now. So Kawasaki's competitors are struggling. But growth in a shrinking market does not happen just because the other guys are having a bad year. Kawasaki has been executing a strategy that is genuinely brilliant, and it starts with something that sounds boring but is actually the most important factor in the entire motorcycle industry right now: price. When interest rates were near zero, financing a $15,000 motorcycle was painless. Monthly payments were low, and buyers could stretch to the more expensive option without flinching. But with powersports loan rates running between 8% and 12% in 2025, every $1,000 of sticker price translates into real monthly pain. And Kawasaki has positioned itself as the brand that gives you the most performance per dollar spent. Look at the numbers across the lineup. The Ninja 500 at $5,299, compared to the Honda CBR 500R at $7,399. The Z650 at about $7,099, compared to the Honda CB650R at roughly $9,299. And at the top end, the ZX10R at $16,999 versus the Honda CBR 1000 RRR SP at $28,999. That is a $12,000 difference on leader bikes. Against Harley, the gap is even more dramatic. Kawasaki's cheapest real motorcycle costs $5,299. Harley's cheapest bike, the Nightster, starts at about $9,999. For a first-time buyer in their 20s, the difference between a $5,299 Ninja and a $9,999 Harley is not just a price gap. It is the difference between being able to afford a motorcycle and not being able to afford one at all. But Kawasaki is not just winning on price. They are also winning on technology in a way that no other manufacturer can match. In 2015, Kawasaki released the Ninja H2 and H2R, and the motorcycle world lost its collective mind. The H2R produces 326 horsepower from a 998 cubic centimeter supercharged inline 4. That is not a typo. 326 horsepower from a liter engine using a centrifugal supercharger derived from technology that Kawasaki Heavy Industries developed for gas turbines and jet engines. To put that in perspective, 326 horsepower is more than a Porsche 911 Carrera makes, from a motorcycle engine roughly the size of a large toaster. The supercharger itself is a work of art. It spins at up to 130,000 revolutions per minute and force feeds air into the combustion chambers at pressures no naturally aspirated motorcycle engine can achieve. Kawasaki did not license this technology from anyone. They built it in-house, using the same engineering teams that design compressor blades for industrial gas turbines. That is why no other motorcycle manufacturer has been able to replicate it. Honda, Yamaha, Suzuki, Ducati, none of them have the aerospace division backing that would let them develop a comparable system. No other major motorcycle manufacturer has factory supercharged bikes in production. Nobody. The H2 family has expanded into a full platform. The street-legal Ninja H2 at $32,700 makes 240 horsepower. The ZH2 naked superbike at $21,999. The H2 SX SE Sport Tourer at $29,999, which comes with radar adaptive cruise control. And they even put the supercharged engine into the Teryx H2 side by side. That supercharger technology is Kawasaki's engineering moat, and it is built on aerospace expertise that no pure motorcycle company can replicate. Then there is the hybrid play. In 2023, Kawasaki launched the Ninja 7 Hybrid, and it is genuinely a first. This is the world's first mass-production strong hybrid motorcycle, combining a 451 cubic centimeter parallel twin engine with a 9 kilowatt electric motor. It offers clutchless shifting, an electric boost mode, and it starts at $12,499. Nobody else has anything like it on the market. And here is where the 2021 corporate restructuring becomes critical context. In October 2021, Kawasaki Motors was spun off from Kawasaki Heavy Industries as an operationally independent company. That might sound like boring corporate housekeeping, but it was actually a strategic masterstroke. Before the spin-off, Kawasaki's motorcycle division was competing for capital and attention against shipbuilding, aerospace, energy systems, and industrial robots within the same parent company. After the spin-off, the motorcycle team could make faster decisions, allocate budgets more aggressively, and react to market conditions without waiting for approval from a conglomerate board focused on gas turbines. The results are obvious. Kawasaki has launched 30 new internal combustion engine models in the 2024 through 2026 cycle alone. For 2026, They are rolling out the Z1100 SE at $14,999, the KLE 500 adventure bike at $6,599, and the Eliminator 500 cruiser at $5,799. That pace of new product development would have been almost impossible under the old corporate structure. If you have made it this far, hit like and subscribe. I cover motorcycle industry analysis and power sports news every week. Now let us talk about where this is heading, because the next 5 years in the motorcycle market are going to be wild. The biggest short-term disruption is tariffs. In April 2025, the United States imposed a 25% import tariff on motorcycles, up from 2.4% previously. That is an enormous jump that adds roughly $2,000 to $5,000 to the price of every imported motorcycle. Since Kawasaki, Honda, and Yamaha all import the majority of their bikes, this reshapes the competitive math significantly. But here is the thing. Kawasaki has the Lincoln, Nebraska factory that has been operating since 1974. While it currently assembles mostly jet skis, all-terrain vehicles, and side-by-sides, the infrastructure exists to expand motorcycle assembly if the tariff situation makes importing untenable. That kind of optionality is incredibly valuable when trade policy is this unpredictable. The demographic shift is equally important. The Motorcycle Industry Council reports that the median motorcycle owner in the United States is now 50 years old. Women riders have grown from about 10% of the market in 2009 to 20% today, and 26% of millennial riders are women. The market is getting younger and more diverse, and those new riders are not walking into Harley dealerships asking about Road Kings. They are walking into Kawasaki dealers asking about the Z650 and the Ninja 500. Kawasaki is also the only manufacturer among the Japanese Big Four that is simultaneously producing and selling internal combustion engine, hybrid, and fully electric motorcycles right now. Honda has promised electric, but has not delivered in the United States yet. Yamaha has electric scooters, but no electric motorcycle for the American market. Suzuki has been eerily quiet on electrification. Kawasaki already has the Ninja E1 and ZE1 electrics on showroom floors at $7,999, plus the Ninja 7 Hybrid at $12,499, plus their entire traditional gas-powered lineup, plus electrode-electric balance bikes for kids as young as 3 years old. That last detail might seem trivial, but think about what it means. Kawasaki is building brand loyalty starting at age 3 with the electrode, converting those kids into Ninja 400 riders at 18, and then moving them up through the Z650, ZX6R, and eventually the H2 over the next 20 years. No other manufacturer has that complete a cradle-to-superbike pipeline. Looking further out, Kawasaki has been testing a hydrogen combustion motorcycle prototype with a target timeline in the early 2030s. Hydrogen internal combustion would let riders keep the engine sound, the mechanical feel, and the riding experience of a traditional motorcycle while producing zero carbon emissions. If Kawasaki can make that work at a reasonable cost, it would be a genuinely transformative technology. There is one emerging threat worth watching. CF Moto, the Chinese manufacturer, grew over 154% in United States sales in 2025, according to industry data. They are coming from a tiny base, but their strategy of aggressive pricing on competent middleweight bikes looks familiar. It is essentially what Kawasaki did in the 1960s and what Korean automakers did to Detroit in the 1980s. Kawasaki's leadership team is almost certainly aware of this parallel. So where does all of this leave us? Kawasaki's rise to the top of the American motorcycle market is not an accident, and it is not just about one good year. It is the result of a 60-year strategy that started in a meat warehouse with 10 employees and a willingness to build the fastest, most aggressive machines on the road. They established the Ninja as the most recognized sport bike brand in the world. They built a pricing strategy that makes them the obvious choice for cost-conscious buyers. They invested in supercharger technology that no competitor can match. They launched the world's first hybrid motorcycle, and they restructured their entire corporate organization to move faster. The Z650 did not become the best-selling motorcycle in America by accident. It became the best-selling motorcycle because Kawasaki spent 6 decades building the brand, the technology, and the dealer network to make it happen. Honda will not go quietly. They are still the largest motorcycle manufacturer on Earth, and their engineering depth is staggering. But right now, in this market, with these economics, Kawasaki has the momentum. And Harley? Harley still makes beautiful touring motorcycles that a dedicated community loves deeply. But until they figure out how to sell bikes to people under 40, the trajectory is not in their favor. Kawasaki bet that the future of motorcycling belongs to riders who want performance, technology, and value. In 2025, the sales numbers say they were right. If you want to see how Harley-Davidson got into this mess in the first place, that video is on screen now. Subscribe so you do not miss it.